Welcome to AML Conversations, the Solution Series. This podcast series focuses on practical information about solutions to challenges you face in your financial crime compliance program. These solutions include managed services, technology, advisory, and third-party risk management. You can access this series and other AML Conversations and This Week in AML podcasts at our website, amlrightsource.com, SoundCloud, or wherever you get your podcasts.
Hello and welcome to the Solution Series. My name is Rachel Dettmer. I'll be your host, and today we're going to be discussing the importance of adverse media monitoring in compliance. Joining me are two of my colleagues, Christopher Sindik, Director of Third-Party Risk and Due Diligence at Blue Umbrella, and Patrick Bowe, Senior Director of Product Solutions at AML RightSource. Welcome to the show. It's great to have you both.
Hello. Thank you very much, Rachel. Glad to be here.
So to start off, let's explain to our listeners what adverse media monitoring is and the role it plays in effective risk management and compliance. Chris, could you kick us off from a third-party perspective? And then Patrick, I'll come to you next from a customer viewpoint.
Yeah, definitely. And I think it's going to be a good, two different perspectives here between Patrick and myself. So we have a good lineup here. But I come from sort of more of the perspective of working with corporate clients, not non-financials, although we certainly do a lot of that as well. And I've done that in my career too. But generally how clients will sort of come into this is that they have either a backlog or they have a new person in charge, or just sort of a new set of marching orders from their leadership that they need to do it. And frankly, if you look at some of the things that the government has said over the last 5 or 6 years, is that this type of monitoring is becoming not just a nice to have, but a need to have as well. So, we talk about adverse media monitoring. The amount of content that's out there in the world today is just exponentially increasing. And then we'll get into that in a little bit. But I saw one figure that there was a single newspaper in the UK that was producing 1,000 articles a day online. So if you think about that just from the perspective of one newspaper in one country, it's a lot to cover, and, times, the hundreds of newspapers in a country, and obviously all the countries in the world, it adds up pretty quickly to hundreds of thousands of new articles a day. And with each one of those articles is a potential risk or a potential new piece of information that can help you in your company. So again, kind of getting back to the role that it plays in a company is really to stay aware of the most important risks that can impact your company. That's the big question. How can this third party potentially hurt us? And maybe that's a bit of a pessimistic point of view, but you really need to go through and evaluate that. And certainly things like sanctions and whatnot, that's become baseline standards. But reputational damage and just happenings that surface in the media can have a really big impact on the process that you have with these third parties. So typically due diligence reports, training, certifications, contracting, et cetera, they're all part of the bigger program. So AMM is another cog in that machine, and a really important one as well, because a due diligence report is a snapshot in time, but that AMM, that monitoring, really comes to bear fruit with more of the day-to-day, because you may only do a deep dive on them once a year or once every other year, but that AMM can help you become aware of, those important risks that you might not know about otherwise if you waited 18 months to figure something like that out. So really help clients come through and, understand risk more in real time.
Yeah, and I think if we look at it from just the larger financial institutions' perspective as well, in what they are compelled to understand who their customers are, what risk they pose to the bank, and to understand what controls need to be put around those. So they are compelled to do that. Now, a lot of that is just having a look at who the individuals are that are within the organization themselves, making sure they are very comfortable that these are real people. They're not on a sanctions list. They're not on a PEP list. And if you want to go further and understand what real risks they are and what controls should be applied to them, then you do want to go further, and you do want to start looking at adverse media on these clients? Have they ever been involved in particular types of financial crime? Have they ever been accused of anything before in the media? So really, it's about going beyond just the basics of what they are compelled to do, and trying to understand who their customers are, and do they pose any further risk to us as a financial organization in terms of protecting our reputation. Are there any controls you can put around them in order to make doing business with these particular customers safer? So I think a lot of our banking clients look at adverse media monitoring as a sort of early warning system as well. Like what is potentially going wrong with our clients that we haven't necessarily foreseen, and can we head off any damage to ourselves as a large financial institution? So that's certainly how I view it.
All really great points. Chris, I know you just touched on the volume of data being a challenge. I actually recently read an article that said 90% of the world's data was generated in the last 2 years alone. It also went on to say that we're on track to produce 147 zettabytes of data this year and 181 zettabytes by 2025. But from each of your experiences, and feel free to expand on the data challenge, what are some of the biggest challenges organizations face when it comes to adverse media monitoring?
First of all, I didn't know a zettabyte was a point of data capacity. So I learned something every day, and that's what I'll have to look at. I was familiar with kilobytes and gigabytes and terabytes, but we got the zettabytes now too. But yeah, I mean, as I mentioned earlier, I think that's absolutely one of the challenges that organizations face when it comes to AMM is false positives. And obviously that is directly correlated to the volume of data that comes in, especially. Typically how it looks with a client is they'll just have a list of, 10,000 names, 1,000 names, 500, a million sometimes for, the ones that they need to know about on a daily basis. And, churning that through, if you think about just doing a Google search on your own, if you searched for a company's name and, if they're a fairly large company and you wanted to find a piece of information out about them when it comes to anti-money laundering or bribery or, human rights, whatever it might be, if you just Google search that, you would be looking at pages and pages and pages for hours and hours and hours to try and find that. And imagine doing that every single day. So, absolutely one of the challenges is just the volume of data that comes through. But luckily, since this is an online, automated, intelligent process, there are certain ways that you can overcome that too. I think one of the other challenges is that, typically clients don't have the bandwidth to handle this in-house. They can go through and, they certainly have enough people to sort of manage the day-to-day workings of the program and the volume of onboarding and checking, certain types of hits too. But, it quickly becomes apparent that they're going to have to hire a team. And there's there can be an appetite to do that in-house, but, looking at a provider that does it is their main core business is much more appealing. So I think that obviously the data and the false positives is a big part of it as well. And also just knowing the region and the seriousness of those ongoing hits and the credibility of the media sources too. We mentioned the zettabytes of data that are out there. If you're looking at certain newspapers or online media sources that you don't recognize because you're on the other side of the world, you've never even visited that country, and there's a genuine hit on an entity that you're doing business with or thinking about doing business with, you say, okay, well, what is it? Is this a very highly politically motivated media organization? Sometimes, even parody websites in people probably know The Onion, where, they may publish something outrageous and hey, it gets scooped up like anything else. And, if it's from a region that you're not terribly familiar with, maybe you sort of get bamboozled a little bit into thinking that that's genuine news. And luckily, it's a pretty extreme circumstance that's there, but it really does highlight, how you have to know these regions and again, sort of know the motivations behind some of these sources too. So I think that's one of the challenges, obviously. And two, just having a bit of an unbiased approach to it. If you go through and you look at these hits and maybe there's a vested interest to maybe not action that or to label it as a false positive because you don't want to rock the boat or you don't want to, have to remediate a potential hit. It's a real concern. So I think it's also that consistency, the credibility of the sources, and again, the volume that we've talked about before. So having some, meaningful AI technology, filtering, keywords, being very deliberate with your searches and how you remediate those hits is a key point as well.
Yeah, and just to add on quickly to what Chris has said about the false positives there. I mean, one of the things is we know there are a lot of benefits around adverse media monitoring, but those false positives and the fact that you've got to build such a big team in order to be able to manage those historically means that financial institutions in particular tend to restrict a lot of the monitoring they do to simply just their high-risk customers. Rather than having the capability to do that on all of their corporate customers as well. So there are some real, or there have been anyway historically, some real roadblocks to doing adverse media monitoring in a much wider way that would actually benefit the customers. Also, while you were talking, I just dug out some of the stats because we've been curating our own adverse media list for the last 12 years now, and we actually add on globally, we add in 800,000 articles a day. Those are curated. We know that there is adverse news in those articles, and we are adding in 800,000. We are adding in 800,000 a day. And one of the problems that our customers have in particular is actually finding news sources in the right languages, in the right jurisdictions across the world. I was working with a client just recently who was onboarding an awful lot of companies in Mexico and was struggling to find news sources that he could reliably use out there from some of the larger organizations. Everyone's got great coverage from a media perspective across North America and across Europe. But once you start going outside of there, actually finding news sources that you can use to onboard clients who may pose a risk, or they may not. They may be perfectly legitimate customers. But finding a news source that you can rely on in those jurisdictions is something that they really struggle with when they want to work in slightly more exotic locations than America or Europe.
Those are big numbers, Patrick. And I also think that they're a great example of just the sheer volume of data involved, especially if those are curated specifically based on them being adverse articles. So, Chris, you brought up technology and AI. How is it changing adverse media monitoring, and can you provide some examples for us?
Sure. Yeah, and I think it's a really practical question. Frankly, the industry compliance, KYC, monitoring, especially, they're sort of the poster children, if you will, for AI. A lot of times when it comes to media monitoring and searches and screening and things of that nature as well. But, even to kind of look ahead or, interpret your question a little bit differently too, when it comes to AI changing the landscape, not only is it possible to have is kind of a tool on the back end for us to help find false positives, remove them, find more meaningful articles, things like that. AI is, not just the solution, but maybe the cause of a lot of the problems as well, where, AI is writing articles. There's all the, there's articles about articles where it's saying that, AI is going through and, writing blogs on a daily basis, and, people are interpreting those differently, and you'll even have the same topic and you'll have, hundreds of articles written about it. Obviously, if it's a high profiled news story, people will, feed in various news sources and kind of come up with this amalgamation of the different data points, totally written by AI, and then it's put out there. So I think that it is adding to the noise that has to be dealt with too. So that's sort of the glass half empty view on how it's changing the landscape. But if we look at, glass half full, what can it do for us? It's, again, as I mentioned, it's really a great starting place for a lot of companies to use AI. I've been to a number of conferences in the industry, and there's a lot of buzz about, using AI and how can it be done in a practical manner. So, is a again, kind of a practical next step forward is people can use the AI tools to go through and do some of the pre-screening, making sure that it's a relevant hit, that it's not on the wrong entity, that it's not outside of the risk topics that a company cares about. I think that's another point too, is that you say adverse media monitoring, what's adverse to one company may not be adverse to the other. For example, if it's, a company that you're working with and they're a technology provider and, they have some concerns around, their truck got in an accident, for example. It's not great news. It's not something that you'd like to see happen, obviously, but does it really have a material impact on your relationship with that software provider? Probably not, I think is a pretty fair answer. So being able to carve out what's actually meaningful to you, I think, is one of the key areas for AI. And, luckily we have a number of things we're doing here as well, where AI hasn't taken over yet, but it's really just seen as another tool in the toolbox. Like filters and keyword searches and relevancy scores, things of that nature that have been around forever when it comes to screening and media monitoring, things like that. But having it being done in a much more sophisticated way, that's the direction that it's coming, so that you really can do more with less. And that's really a trend that we're seeing with the compliance industry or KYC or third-party risk management overall is you have to be able to address these new risks, and sometimes with the same budget or less budget than you had in the year before too. So it is a new member of the team, if you will, AI, and you got to train it like you would any new employee to go through and help to do meaningful work for you at the end of the day. Patrick, what have you seen with changing AI, or how AI is changing the work that you're doing?
So I think I love the fact that you had a pessimistic take on it. By the way, it's making our job harder because it's making more and more articles. I never considered it like that before. We're creating a library, but adverse media monitoring just lends itself to some of the new technologies, some of the new machine learning technologies, and some of the generative AI technologies that you can apply in this area. And I think we're going to see that it's very much a democratizing force, whereby you're not just going to be in a position where you're looking at your high risk clients. You're going to be able to open that up and look at many more clients within your business as well. That's going to make your business safer, because you can take on clients that are in high-risk industries but have impeccable corporate character, as it were. And it means you're going to be able to hopefully keep more and more of the bad guys out, even if you haven't necessarily categorized them as being high-risk clients beforehand. So I actually think it's going to open up banking services in particular areas. I think more financial institutions are going to be able to take advantage of adverse media monitoring simply because of the workload that they're going to be able to manage is going to be so much smaller than it is historically. I think some of the rates that we've seen typically, an organization that has done adverse media monitoring very well in the past will still have a hit rate of over 10%, even if they're doing it very, very well now. You compare that to sanctions screening and PEPLA screening. There you would expect a hit rate of closer to 1%. So you can see how in the past it has been very difficult to implement for these organizations. But I think as we start to implement these new technologies, it's going to become easier and easier for institutions to be able to roll out this kind of monitoring to more and more of their clients, making their business safer and actually making it easier for customers who would historically have been considered high risk to actually be possibly a medium risk and get access to more and more banking facilities that they wouldn't otherwise have been able to do. So I think there's a lot of possibilities here for the institutions. It's not just going to be a cost on their business. It's going to be an enabler for their business as well.
Yeah, and Patrick, following up on that too, it's from what I've heard and seen too, is that the cost, the dollar cost for some of the solutions is coming down, quite a bit for some of the big names that are out there too. So the barrier to entry is lessening too. So as you mentioned, it's more accessible to maybe smaller firms or firms that don't have the resources to do it. It's hey, one of the few things that's getting cheaper and better these days too, which is always great.
I think when we started doing this, we've been trying to implement machine learning and more recently generative AI for 2 years now, and our costs have come down immensely. If you imagine just our wholesale cost on each search or each query that we have to make against some of these technologies, they've fallen from 5 cents per query to below 1. And I fully expect, after some of the conversations I've had in the last few weeks as well, with some of the new advances that we've been able to make and some of the optimizations, we're going to get them even lower than that in the coming future. So it's a great technology, and it's becoming cheaper and more accessible as time goes on.
Patrick, you just touched on machine learning and recently Gen AI. Can you expand a little bit on the application of these models within our surveillance platform?
So I think from with our tools, with surveillance, rightness surveillance, over the last couple of years, we've tried to reduce down the number of articles that we actually bring back. So we've gone through using our traditional search in order to bring back the articles. And then we've been training a neuro-linguistic model for the last 2 years that understands English and understands various other languages, so that we can actually determine whether or not somebody is the subject of a crime, or is trying to, or is actually the victim of a crime, or is associated with trying to help a crime. So the example I always give is the justice minister in most countries. If you do an adverse media search on that particular person, they will always be associated with things like crime, things like bribery, things like money laundering, primarily because they spend most of their careers trying to minimize those things. But a traditional search will always bring back adverse media for a justice minister. What we would like what the NLP does for us within surveillance is actually say, yes, it's the justice minister, but we feel that the justice minister is not committing the crime, and therefore we do not return a search at all. There is nothing for a human to work with there. One of the good examples that I got using NLP, and one of the ways in which we can show that it's very, very successful, is when we do a search for Donald Trump. If we turn off our NLP searching, we get masses of adverse media. Everything about that, everything about the former president of the US is adverse. We turn on NLP prior to the last couple of weeks, and all we got was news about the court case where he was actually being accused of a crime. So the number of articles dropped down from over 20-odd thousand to a couple of hundred across different jurisdictions. So there's a real benefit there for clients. And actually, we are trying to get our clients used to the idea that we're going to bring back no results at all, which is what you'd expect for the vast majority of your clients. So 52% of searches that we do now, we bring back no results at all. We are hugely confident, and we work with our customers and we say to them, go search, you search as well. You will not find anything. We haven't been able to find anything. It's just not there. So we're dramatically we're dramatically reducing the amount of time it takes you to find an adverse article on one of your customers. And the other thing that we're able to do with that technology is then we can now use the new Gen AI technologies to actually be able to auto-dispose the alerts. So NLP has dramatically reduced the amount of noise and the amount of articles that you will see for each individual. Then we use Gen AI to come along and actually review, okay, this is clearly adverse, but what do I think should go here? Do I think it's truly risk relevant? And if I do, can I add a narrative to explain why? So where our customers, human investigators, are coming into that loop is at the very end of the process when all the articles have been reviewed. There's already a recommendation there for them, and they simply need to take action on that. So in that way, that's the main reason why I'm so optimistic in this area, that we're really going to be able to make these tools available to much broader sections of our clients' customer bases. I don't know, Chris, on your side, if you're seeing things, similar things on your side.
Yeah, definitely. I think you brought up a really good example there with former President Trump, where if you have an extremely prominent name like that of a politician, or a business executive, or even a Fortune 1000 type of company, or prominent university, NGO, something like that, you're just going to get a lot. Like if you had, for example, a law firm that you were monitoring, or an accounting firm, or professional services, it would mention, in an unfiltered, un-AI capacity, it would bring in any type of study that university was involved in, or, any type of, for credit card fraud, for financial institutions. If someone happened to use a skimming device and they were using a bank's debit card, okay, well, then they're mentioned, but it has literally nothing to do with a risk, just totally, total error that's there as well. So, one of the things that we're doing, not only with AMM, but on more sort of our due diligence report side, which is, obviously much more of a static static report and static part of the program, where it's not updated, and ongoing monitoring isn't a part of that, but it's still useful, is, looking beyond the headlines and looking beyond just the keyword hits that might be in that article. It could be where the subject that you're searching is mentioned, company ABC accused of fraud. Okay, well, what is that? And then there's like another, 5,000 words to that article or that report that's maybe genuine, but you'll read it and think, okay, well, what is this? Where it takes an hour and a half to kind of read through it and understand it and look at various sources. So one of the things that we are doing at Blue Umbrella is that we're creating these tools, and I think we're starting out the right way, starting small, making sure we do it the right way, not handing the keys to the program, to the computers just yet, but having it go through and summarize the articles, the who, what, when, where, why, how, that everyone needs to know, so that you can look at that in 5 or 10 minutes and get the basic points. And if you find that you need to have more details, or you found the article interesting, there's always the source there for someone to look at. And it's really important to have those guardrails around that. I certainly like that term, which is that you're not having things entirely written by AI, and you're not having it entirely done manually by analysts. There's the sweet spot that's there. It's really something that's become a standard for how you're doing this, because again, people are being asked to do more with less. So the human element is always going to be there. So again, we're using Gen AI and other tools to help summarize articles, find articles, helping with the translations, and looking at other things too, where it's not just text on a web page, but it's PDFs. It's those documents that aren't as easily read, to have that brought in. And again, carving out those risk topics for particular clients where one may not want to have any environmental sort of risk brought their way because it's just outside of their remit. There's another system that handles that, whatever it might be, to be able to exclude those types of things from HIT. So I think it's mainly in the media part that we're looking at now, but certainly there are lots of optimistic views and new use cases that can be used. But I think it's important to do it the right way, because at the end of the day, you may even want to think about it from the perspective of if it goes wrong. If there's a miss, if there was, a false positive that made it through that you acted upon, but it turned out it was a fictitious article for whatever reason. So making sure that there's the ability to audit what was done, what was searched, what was included, what was dismissed, et cetera, so you can come back and rely on that information. Or if the DOJ comes knocking one day and says, tell us everything you know about company ABC that paid a bribe, and oops, they were part of the monitoring, and what did AI do about them? So I think that's another really important aspect of it, is not just using it, but making sure you have receipts. Again, if the unfortunate happens and you realize you got to, find out what you knew when and why, is really important.
Yeah, I like it. I like your term guardrails. I think that's very important. I'm clearly optimistic about the future here, but there is a risk that our clients become a little too optimistic and exuberant about what this can do as well. So we a lot of our implementations now are spent working with their technology and model management teams and trying to explain how these things work and how we can be confident, so they have that ability to explain to their regulators whatever's going on in our systems. It cannot be a black box. It must be explainable. So like with some of our organizations, they're already quite sophisticated in terms of how they implement these. They have a model governance teams. With others, we're having to go through our model governance documentation with them, explaining how it works, explaining why this is important, and finding someone in their organization that will sort of take this on and understand it, so that they've got that knowledge internally as well and can explain to their regulators exactly how these tools are working. Because that's very important to us. And I like that term, guardrails.
Yeah, and it's not just that we're doing it, but we can communicate to our clients how we're doing it, because they need to go through and, be able to explain things to, their board of directors or their, risk function or audit function. And you can't say, oh, AI is a part of it now. Okay, well, how? What are they doing? Is it a closed system, open, et cetera, too? So it's something we've shared with a couple of clients so far, and we'll continue to do so in the future.
We're coming to the end of today's episode, but before we wrap up, I wanted to ask if either of you had any final thoughts or pieces to add to this conversation.
I think we've tread a lot of territory so far, and I think to just hit on a couple points is that a lot of clients are used to, or a lot of companies, I should say, are used to sort of the due diligence process being a snapshot in time. We'll do it when a new customer or client or supplier, distributor, agent, et cetera, is brought on. Okay, and there's that picture that's taken, and it's there, and sometimes it's a good looking picture, and it may sort of degrade over time, where there's things that we didn't realize about them, and they're in the headlines a lot more than we would like. So it's not just that snapshot, but it's that ongoing monitoring that's important. And I'll read here from the DOJ's evaluation of corporate compliance programs, which was updated in March 2023. And it says, quote, and this is a document, for those who aren't familiar with it, that if there was an enforcement action being brought about by the DOJ, the criminal division, that they sort of given insights into how they would evaluate programs. And based on their evaluation of a program, they can increase fines or they can decrease fines, or have a declination, et cetera. And they say in here, prosecutors should further assess whether the company engaged in ongoing monitoring of third-party relationships, be it through updated due diligence, training, audits, et cetera. So I know a lot of times it's sort of a nice to have, and people have to justify the ROI for the spend on these types of things. And, there are certainly government regulations and advice and guidance that point to this being, worth its worthwhile. Worth its weight in gold sometimes too. So I think that's something to point to that is important too in justifying these programs too, where it's becoming more of a standard than a nice to have too. But Patrick, what are your final thoughts?
No, definitely. I think we have always looked at these tools as enablers, ways to make a very difficult job much easier, ways to reduce the risk to the banks, and ways to enable more business that financial institutions weren't able to do before. And I think we've come a long way with that. But the point that you're making around regulatory scrutiny, regulators are not in a box in complete isolation. They know what's going on in the wider world, and they are asking these institutions, what are you doing in this space? It may have been more difficult and it may not have been an expectation in the past, but we know that it is becoming easier and more practical to do this kind of monitoring now. And I think more and more you will see regulators looking at financial institutions and asking them what they're doing and why they're not doing more. And we are seeing more and more clients come to us and start looking at how they might adapt their adverse media monitoring programs to look at more and more customers rather than just the historically high risk customers as well that they were looking at. So I do think it's an enabler, primarily an enabler, but I do think regulatory scrutiny is really stepping up in this area as well. And financial institutions, third parties, are being expected to do a lot more than they are doing today as well. So I think this will be a growing area for some time to come.
And that brings us to the end of today's discussion. Thank you, Patrick, and thank you, Chris. It's been an absolute pleasure, and I've really enjoyed each of your perspectives and the insights that you've shared with us today. And of course, thank you to our listeners. Stay tuned for more episodes coming soon.
Rachel, thanks so much for having me on. A great discussion today.
Thank you very much.
Thanks for listening to this episode of AML Conversations, the Solution Series. More episodes will be posted in the coming months. If you find this installment interesting, there is more great content at amlrightsource.com. If we can help you with your financial crime compliance needs, schedule a meeting on our website. Together, we can reimagine compliance.